Good morning, everyone. My name is Sanushri, and today I will be presenting a financial performance evaluations of two major companies in the Malaysian FMCG industry, which is Dutch Lady Milk Industry Berhad and Nestle Malaysia Berhad, covering the financial years 2021 to 2023. These analyses focus on comparing both companies in terms of profitability, liquidity, efficiency, and market performance through 14 key financial ratios. In addition, I will briefly explain the horizontal and vertical analysis to identify the performance trends and structural difference between the two companies. The purpose of these presentations is to highlight each company financial strength and weakness and to provide insights into which company has demonstrated better financial stability and growth over the 3-year period. Let's begin by understanding a brief background of each company. Introductions to financial business. Finance is the discipline that focuses on how individuals and business manage investments and acquire capital to support their goals. A financial business includes organizations that provide services such as banking, insurance, investment, and financial planning to individual corporations and governments. Next, the income statement outlines a company earnings and expenses over a specific period, while the balance sheet provides a snapshot of its assets, liabilities at a certain point in time. Overall, finance play a wide role in managing money wisely, ensuring stability and support organizations' growth. For this financial performance evaluation, we have selected two major players in the consumer goods sector of Malaysia, which is Dutch Lady and Nestle Malaysia. Both the companies are known for their strong market presence in the food and dairy industry, offering a wide range of products to Malaysian consumers. Dutch Lady Malaysia is one of the leading dairy companies in the country, and it was incorporated in 1963. The company is a subsidiary of Freelance Campina, a well-known global dairy cooperative based in the Netherlands. Dutch Lady Malaysia is involved in manufacturing, distributions, and marketing of various dairy products such as powder milk, liquid milk, yogurt, and growing up milk for children. The company's financial strategy focus on achieving stable growth, improving operational efficiency, and driving product innovation. Thanks to its strong brand reputations and consumer trust, Dutch Lady consistently generates solid revenue and maintains a strong position in the Malaysian dairy market. Now let's take a look at Nestle Malaysia Berhad company background. Nestle Malaysia is one of the largest food and beverage companies in the country. It was incorporated in 1912 and has been listed on the main market of Bursa Malaysia since 1989. The company is known for its extensive portfolio of popular household brands such as Milo, Nescafe, Maggi, KitKat, Nestle ice cream, and Nestum. This product has various segments including dairy beverages, prepared foods, nutrition, confectionery, and infant care. From a financial standpoint, Nestle Malaysia benefits from a strong and stable revenue base, supported by its brand equity, widespread of distribution network, and consistent of consumer demand. In addition to financial performance, the company has also been active in sustainability efforts, including reducing the plastics usage, promoting recycle, and improving energy efficiency across its supply chain.
Very good day to my beloved lecturer and my friends. My name is Nandini Mary Notre Francis. My metric number A2480077373EP. Today I will present about the key financial relation about the Dutch lady. Let's begin by looking at the financial performance of Dutch lady milk industrial over the past 3 years. Revenue grew by 18.1% from 2021 to 2022 and further increased by 7.7% in 2023. However, this growth did not translate into profit. Their net profit margin fell sharply from 21.88% in 2021 to only 3.5% in 2022, with a slight recovery to 5.02% in 2023. Return of equality or ROE also dropped significantly in 2022 to 11.66%, recovering slightly to 16.55% last year. Another concur to the current relations, which declined from 1.58 to 0.80, signaling possible liquidity issues. Meanwhile, the debt to equality ratios increased from 0.83 to 1.17, meaning Dutch lady is relying more heavily on borrowing. This tells us the deposit growth in sales. Dutch lady in under pressure in terms and profitability a short-term financial health. This is the graph for the financial relation 2021 to 2023. Okay, next I will present about the financial radiation visual comparisons. Clearly, we can clearly see the visual comparison between Dutch Lady and Nestle Measure. First, on revenue growth, Nestle has a much larger revenue base through Dutch Lady shows standard growth. For net profit margins, Dutch Lady experienced a sharp dip in 2022, while Nestle maintained a stable margin above 9%. Looking for return of equality, Nestle constantly performed better, returning close to 100% annually. Dutch Lady by contrast show a big drop mainly due to operation and cost challenges. Overall, Nestle demonstrates stronger and more concentrated financial health compared to Dutch Lady. Next slide, I'll present about the key financial relation 2021 and 2022. Now let's focus on Nestle membership. Nestle display a constant revenue and profit growth, surely that they are able to manage costs effectively even during inflationary periods. Their net profit margin remained stable around 9% each year. Return of equality stayed impressively high around 97%, which is an expectation and indicates stronger shareholder returns. Like Dutch Lady, Nestle also has a low equality relations. Their current relations stay below 1.0, which is a normal for the FMCG companies relying on the fast inventory turnover. Demand levels are high, but Nestle manage them well and they still maintain operation strength and cash flow stability. Next slides, I will present about the summary of Dutch lady financial situations. To summary, Dutch lady positions between 2021 and 2023. While revenue increased gradually, profit dropped in 2022 and only improved slightly in 2023. It quickly weakened and cash reserves dropped as a short-term defense rose. What doesn't its meanings? Dutch lady need to improve its money management and struggle with the covering short-term obligations. What can they do? Improve the receivable collections and control operation spending, delay not urgent, expensive, and manage working capital more effectively. Lastly, I will present about the strength and suggestion for improvements. Opposite to challenges, Dutch Lady has a clear stance, a stronger, trusted, branded, steady product demand and continually profitably. However, they face issues like a sharp profit decline in 2022, increase recently on debit, a slowly cash flow. Here are some suggestions to move forward. First is develop the strict budget plans. Second is expand online and healthy focus product lines. Third is use profits to reduce borrowing. Fourth is improving inventory turnover and cost control. That this improvement can help the charity recover strongly and suggestion. It's a long-term growth. That's all from me. Thank you.
Good day, Doctor. I'm Kalayarasi Gondasamy. Today, I would like to presenting key strategy recommendation for Dutch Lady Milk Industries Berhad or DLMI to improve its financial health and long-term competitiveness. Firstly, DLMI needs to improve its liquidity management. The company's current and quick ratio have dropped, suggesting short-term financial risks. To address this, DLMI should strengthen cash flow planning, reduce dependence on short-term liabilities, and improve working capital management, including faster collection of receivables and negotiating better credit term with suppliers. Secondly, it's important to control operating costs. In 2022, profit margin fell due to inflation and supply chain distribution. With the new Bandar Handstack facility now operationally, DLMI has the opportunity to improve efficiency through local sourcing, lean and manufacturing automations. Thirdly, DLMI should enhance revenue streams by diversifying its product portfolio. Customer trends are shifting toward health based on and plant-based beverages. By investigating in R&D and launching functional health drinks or non-dairy alternatives, DLMI can tap into new markets and reduce dependency on traditionally dairy products. Next, Nestle Malaysia has shown consistent strength over the past few years. To maintain this momentum, 4 key strategies are recommended. First, sustain operational efficiency by investigating in automation, supply chain, digitalization, and energy saving measures. This help protect profit margin in rising cost environmental. Secondly, innovative in health and wellness, especially by expanding plant-based, sugar-reduced and eco-friendly products to meet changing in consumer demands. Third, expand local sourcing and ESG practices. Working more with local farmers and SMEs will strengthen the supply chain while supporting sustainability and boosting the company reputation. And finally, accelerate digital transformations. This includes growing e-commerce and personalized marketing and using data analysis to improve customer experience and optimize distribution. Together, these strategies will help Nestle stay competitive, responsible, and future ready. In conclusion, both Dutch Lady and Nestle operate in a competitive and rapidly evolving food and beverages industry. While Nestle has demonstrated steady growth and strategic strength, DLMI has shown realizes and amid challenges and is now positively growing throughout the industry. For potential recovery, with focused improvements in financial structure, operational efficiency, and strategic innovating, both companies can future strength their sustainable value to stakeholder in the coming years. That's all from me. Thank you.